Good morning and welcome to the ROQUEFORT Therapeutics PLC investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen. Simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Executive Chairman Stephen West. Good morning, sir.
Great, thanks Lily, and good morning everyone. My name is Steve West, I'm the Chairman of ROQUEFORT Therapeutics. I'm joined here today by Ajahn Reginald, who is our CEO, and we're here to talk about our interim results, which we released this morning, and also to give you a brief company update as well. So without much further ado, I'll jump into the presentation. Disclaimer. So just to remind everyone who we are, we are a listed biotech company. We're focused on developing first-in-class medicines in the high-value and high-growth oncology market prior to partnering or selling to big pharma. That really does explain why we're here, what we're doing, and I hope you can see that we've achieved a lot in this space in the last 6 months of this year as well. So moving on to the interim results. So just a few highlights here. So cash at bank end of June was 1.38 million. We had a net loss for the 6 months of 742,000, which compared reasonably favourably with the previous 6 months of previous interims of 22. Loss per share has come down dramatically. Our total assets have gone up, and that's as a result of mainly because we bought Oncogene in 2022, but also we bought a bit of plant and equipment for the laboratory that we use as well. Liabilities have come down significantly as well, so the balance sheet's looking very healthy, and our shares on issue have gone up again, mainly because of the acquisition of Oncogene in 2022. So fairly, I hope, standard, healthy set of interim results there. So what I'll do now is I'll just hand over to Ajahn, who can add a bit of meat to the bone and go through the highlights of the first 6 months of this year. Thanks, Ajahn.
Thank you, and good morning to everybody. To give you a bit of context, last year for ROQUEFORT was really about us setting the foundations for us to move forward with our portfolio, to bring that portfolio through development. And what you'll see here is the highlights that demonstrate that we've been delivering against those milestones. So first of all, we signed an exclusive worldwide license agreement, excluding Japan, with Randox Laboratories to use the MidKine antibodies. This is in the area of diagnostics. We as a company are focused on therapeutics. So while diagnostics is not our core, it's great for us to be able to do a deal in that area. And also the diagnostics will be critical to help us to identify the patients that have MidKine related cancers, which are the cancers that we're trying to treat. We then also formed a scientific advisory board led by Professor Joe Martin, with Professor Trevor Jones and Armin Keating. These are all experts in the field. They're people who have worked in clinical trials with big pharma and moved early stage products like ours into the clinic. So have very good relevant experience and are independent. So able to give us a very robust peer review process as we go through deciding which programs to go forward and how to take them forward. And now on to some specific milestones with our different programs. So ROCK1 and ROCK2, which are our MidKine antibodies, successfully completed in vivo safety in preclinical development. This means we were able to reach a significant milestone with these programs. We reached that milestone on budget and in time. So it's very good progress by our R&D team. When we took those programs into in vivo efficacy, so that's when we actually test to see whether the two antibodies are able to kill cancer, we were able to demonstrate that in osteosarcoma. So osteosarcoma is very important because it's an orphan drug, and we'll talk a little bit about the commercial significance of that perhaps later on, and also in our RNSs. What we're able to demonstrate was the ability to reduce osteosarcoma. So we're able to demonstrate cancer-killing activity with our two antibodies, ROQUE1 and ROQUE2. So up until now, we've had 4 programs in our portfolio. And in this 6-month period, we're able to add an additional program. And it's very exciting new technology, the mRNA technology. So this is a technology that we focused on midkine. And what we've been able to demonstrate with the mRNA cancer medicine is that we've been able to demonstrate in vitro efficacy. So in the laboratory, we've been able to demonstrate the cancer killing ability of the mRNA. As Steve mentioned, our business model is to take early programs to identify what we think is going to be breakthrough science, and ideally identify that before the market and before potential acquirers have seen value in it. There have been a number of deals recently that have demonstrated that, particularly with one of our other programs, STAT6. And so we are in multiple discussions. The nature of those discussions is confidential, and I think we'll address that in the questions as we go forward. But the company has had significant interest from multiple licensing partners. Go on to the next slide. So to now look at the specific programs in this sort of overview chart. So as I mentioned, we have 5 different types of programs. We have antibodies, we have the RNA oligonucleotides, we have mRNA, sRNA, and the MK cells. With the antibodies, we've completed both in vivo safety and in vivo efficacy, both in metastatic lung and also in osteosarcoma. With the RNA oligonucleotide, we're on track to complete in vivo safety in the end of this year. And with the mRNA, the breast cancer and liver cancer, this is our newest program, as I mentioned, is in vitro development at the moment. With the sRNA, we already have completed in vivo safety and in vivo efficacy data, and that was well reported. And now what we're doing is moving forward to look at how we can combine that sRNA with nanoparticle delivery. For sRNAs, this is very critical. So the ability to deliver the sRNA to the target site, so to the cancers that you want to deliver the sRNA to, is very important and a significant commercial milestone. But the key part of all of this is you only want to deliver sRNA where you've demonstrated the sRNA can kill cancer. So, you know, in the grand scheme of things, we've got the important part. We've been able to demonstrate that our antibodies and our sRNA can kill cancer in validated models. With the sRNA, we're now developing delivery systems that allow us to target that killing potential. Similarly, with the MK cells, we're continuing our in vivo safety, but those cells have demonstrated in vitro efficacy previously. So again, we've got another candidate where we've been able to demonstrate that the ability to kill cancer, and we're now progressing through in vivo safety so we can move these programs into licensing or, with selection into the clinic. Talk a little bit about external markets. So, the beginning of our discussion this morning, we've talked about how we're doing and how we've been able to deliver against the milestones that we've promised. Obviously, the backdrop of that is the market as a whole. There's been some pretty significant changes in the market since we relisted in September last year. And particularly what we're seeing is a large amount of deals in UK and Europe. So 46 deals totaling over $5.5 billion in Q1 of this year. And this is driven by a number of factors. Big Pharma has a patent cliff. So Big Pharma has a requirement to fill its portfolio with programs from companies with innovative products. And that's really the key. The key is for Big Pharma to be able to find innovative products that are first in class. Now, as we've shown in our previous slide, we're blessed with all of our programs being first in class and potentially best in class programs. So they have the potential to fill the requirements that Big Pharma is looking for. When we look more broadly, we see that there's been over $80 billion of deals in the first 5 months of 2023 in biotech, and particularly immuno-oncology, which is the niche that we work in, is up 6% versus the previous quarter and 42% versus Q2 of 2022. So what we're seeing at a macro level is this movement from post-COVID, a very conservative regrouping the pharma into now a much more aggressive acquisition model as they look at this patent cliff, which is which is very important to them over 2027, 28, 29. One of the key deals that's most pertinent for us is the STAT6 deal. So STAT6, you remember, is our siRNA program. A large pharmaceutical company based in France, Sanofi, completed a $1.2 billion deal with a small biotech company called ROQUEFORT. This deal included $125 million up front, and this was for a preclinical STAT6 program. So a program which is at the same stage of development as our program. And this was on the basis of STAT6 being a target which is now validated and very important for both immunology and immuno-oncology. So in summary, I think we're well placed for moving our programs forward, which is what we can do to highlight the value that we're creating for shareholders. But against that has to be against this backdrop, which is M&A and deal making is now significantly increased, and particularly some of the programs that we were able to select before they were hot, before this was an area that Big Pharma was interested in, like the STAT6 program. We're seeing validation of those programs, and therefore I would argue validation of our business model and our strategic approach to identify early innovation. So as we go forward, as promised, we're delivering R&D targets and preparing our candidates for clinical readiness, and we'll be completing that towards the end of this year. The near-term opportunities for the company are licensing deals and the ability to take one or more of our programs into the clinic. The strategic goal of the company, I think, aligns very well with the pharma paradigm. At 90% of successful biotechs are acquired by Big Pharma because, as we talked about, Big Pharma has a requirement to fill its portfolio with programs that are already coming off patents. So this patent cliff is a big driver for acquisitions in Big Pharma, and we see that from the large number of acquisitions in Europe and more broadly worldwide. We're very focused on delivering our R&D, but also equally focused on delivering licensing transactions. We have a number of those conversations ongoing. They're confidential, but of course we will announce results as we near the ability to be able to look at binding heads of terms or a point where we feel the transaction's likely to go ahead. Very good. So Steve, if I can come back to you, and then we can perhaps look at questions.
Sure. Thanks, Ajay. So we have a number of pre-submitted questions, and we also have some questions that people have lodged during our talk. I believe it's still open to questions if you still want to ask questions. We have quite a few here, which is great. It's good to see the interest in our story, and I'll work through them now. So first one we have is how are discussions in regard to licensing deals or sale of company or assets progressing? Do we have much interest, and how advanced are the talks? Kind of touched upon that just now, Ajay, but maybe sort of reiterate where we're at there.
Absolutely. So we're in multiple confidential conversations. Big pharma discussions do take months. They're not done in weeks. As I think many of you know, I have a background in as a deal maker for Big Pharma. We're in confidential discussions. As those discussions become solidified, then of course we'll announce them. But for the moment, we can't say more.
Thanks, Ajay. Next question, which I was expecting, is the company planning on doing a fundraise? Quite a common question for a company that's releasing interim results. No, we're not. We're not planning on doing that. Our business plan is to progress our R&D to a level where we can enter into licensing discussions, which we're doing right now. And our plan is to complete at least one transaction in the near term, and that's going to deliver two main things for us. The first thing is it's actually going to crystallize some value, and I think make it easier for people to understand how much these programs are potentially worth. And secondly, it's going to fund our business going forward as well. So no, we're not looking at doing a fundraise. I think it's also worth mentioning as well. You can see our cash at bank number there. I mean, it's not a huge number, but it's certainly enough for us to deliver on our plan. Particularly when you take into account we do most of our R&D work down in Australia, and down in Australia we get a 43.5% cash rebate for R&D expenditure. So that certainly helps the cash balance as well. Next question, would licensing deals make Roquefort more appealing to potential buyers, or would they prefer to do their own deals? Over to you, Ajahn, for that one.
I think we're in multifactorial conversations. We're talking to companies that are interested in licensing one or more programs. Our market cap is so low that those conversations, are typically, the typical value of a license deal is typically, much larger than you would see in a small company like ours. So I think as we talk to strategics, to big pharma companies, they're looking at individual programs or they're looking at multiple programs. I think acquirers would typically be interested in multiple programs, or you'd end up in an auction situation where you have multiple parties interested. I've been on the other side of those, and in those sort of discussions, then what starts as a licensing program moves very quickly into M&A, because the only way to get the asset is to buy the company. So these are standard paradigms that we see in big pharma. Many times licensing deals end up in M&A if there's significant competition.
Great, thanks, Ajahn. Next question. In a recent interview, Ajahn stated that Roquefort had 15 years of data. Roquefort has only been incepted around 4 years. It's actually 3 years, but that's fine. Where has Ajahn obtained 15 years of data from? And can we trust that data? So over to you, Ajahn, for that one.
Yeah, no, absolutely. So you're quite right. Roquefort's only been around for 3 years, but Roquefort has acquired 2 significant companies, Lyramid and Oncogene. The work done at Oncogene, some of the patents were filed over nearly 20 years ago in 2004 and 5. And then some of the cell work, the core technology was invented in 2009, 2010, etc. Similarly with Lyramid, there's over a decade of work on the Midcomb programs. So that's where the work comes from. The nature of Roquefort acquiring companies means that those companies had done significant amounts of work, often costing millions of dollars, Australian dollars, particularly with Lyramid, on R&D before it was acquired by Roquefort.
Yeah, I mean, just to reiterate, so I think Lyramid had actually spent tens of millions obtaining data and patents, which we acquired in 2021. Thanks, Ajahn. So next question. You tell the market that you are in deal mode, but then directors buy on the open market. How can Roquefort be in deal mode if you are not in a closed period? Good question. However, there hasn't been any director deals since 2nd of August, I think. So 7 weeks ago. We're obviously very sensitive about not dealing in closed periods. So we certainly weren't trading within a closed period. But all I can say is we are not transacting as a board at the moment. I think we're too engaged in licensing negotiations to be able to trade as directors. But good question. Next question is regarding some social media articles that have been posted online and keep showing their face, and questions around validity of patents and tests. So rather than go through each allegation, maybe Ajahn, you can just give us a sort of an overview of a response for that question.
Yeah, no, absolutely. I think social media, as we'll talk about perhaps later as well, is a free speech platform. People can have an opinion, but I think when you talk about patents, that there is a body, there is a regulator that decides whether a patent is valid or not. In our case, we have patents that have been granted by the US Patent Office, by the European Patent Office, by the UK Patent Office, multiple jurisdictions around the world. So, I think those questions are either out of date or show poor understanding. We have granted patents, so that that has been adjudicated and the patents have been granted.
Thanks, Ajahn. So again, on the topic of social media, this is a good question. How does Ajahn feel about ROQUEFORT having some prominent Twitterati supporters, probably ex-RT supporters now, who own chunks of ROQUEFORT that almost on a daily basis promote ROQUEFORT without ROQUEFORT delivering anything to underpin this promotion? Over to you for an answer on that one again, Ajahn.
Yes, I mean, I think the second part is, maybe start with the second part. As I mentioned, we were very clear, I think, in the prospectus and in other meetings about what we were going to deliver. What we can deliver is progress of our R&D programs, which we've been able to demonstrate. I think that's the internal piece. Our R&D team works very hard. They're very skilled. They're delivering a phenomenally large portfolio, which many companies that have 10 times the value wouldn't have a portfolio that is as strong as this. So I think we are delivering, and our team in particular, our R&D team is delivering very well on time and in budget. I think, as we talked about, Twitter X is a free speech free speech platform. People have the right to express their views. I think as long as that view is not abusive and it's not illegal, I think people can do that. And I'm very pleased that some of them are supportive. Equally, we see some negative stuff on Twitter. That's the nature of the world we live in, and the nature of Twitter being a free speech platform.
Thanks, Ajahn. I'd just like to add to that. ROQUEFORT has been in existence as a biotech company for a little under 2 years. And I say that time period started when we acquired Lyramid in 2021. I think what we've achieved in less than 2 years is remarkable, and I'm very proud of what we've achieved. And I would urge people just to watch this space for the next 6 months or so, and as we continue to deliver, as we set out to deliver. Next question. ROQUEFORT like to give presentations and conference papers, but when will ROQUEFORT release clinical data to be peer reviewed?
Shall I take that one, Steve?
Yes, please. Yeah.
So we're a preclinical company. As we point out here, we're not at the point where we are in the clinic. The clinic, typically you talk about human trials. We would hope there would be a very significant inflection point in terms of valuation and progress of the company once we enter clinical trials. Once we enter clinical trials, we will release data as is customary through to the regulator and through conference presentations and peer-reviewed journals. But we're not in the position yet of having clinical data because we're a preclinical company.
Great, thanks, Ajahn. Next question is, with the market refusing to value ROQUEFORT appropriately, are the board considering a straight sale of the company? No, we're not, but we do share the frustration on the market recognition for value. However, we see our job as delivering licensing transactions, and we're confident if we can do as we plan and deliver these licensing transactions, it'll be easy to subscribe a value to those transactions, and it'll be easy to see how disjoined our market cap is to those transactions. So in summary, we plan to address this low valuation by just continuing to deliver, and the market's going to have to recognize the value at some stage. So no, a long way of saying no, we're not looking at selling the company.
Maybe if I could just add to the valuation disconnect. So the other thing to think about here is for big pharma, a valuation of 10 million or 60 million or 100 million or 120 million is all irrelevant. These are very, very, very small numbers for a big pharma company. If you get a competitive process, if you have 2 or 3 big pharma companies interested in your program, your market cap is irrelevant to what the licensing deal will end up being, in my experience. And I've done deals where we've looked at companies that had very, very small valuations, and we ended up doing licensing deals which were multiples of that valuation. So I think that's the other part of this. It is frustrating for us. It's frustrating, particularly as directors, but also as investors, that the share price doesn't seem to recognize the great wealth of medicines that we have in the portfolio. However, the potential licensors, the potential acquirers of ROQUEFORT are not interested in market cap.
Thanks, Ajay. Next question is, would you consider a large equity investor if there is a good offer on the table, or do you prefer a big pharma partner buyer? I think the best way of answering that is we're not looking at doing a fundraise, so we wouldn't be looking at bringing an equity investor in as part of a fundraise at this stage. However, equity investors are very welcome to buy on market to build up a position. We're very happy with that. And in the meantime, we're going to continue our business plan, which is to complete a licensing transaction to deliver some value and funding for the company. Next question, are you exploring grants, non-dilutive funding, or do you no longer need it? Good question. So I mentioned earlier, we have a very good cash rebate system in Australia where we do most of our R&D work. So that's a very financially efficient way of doing it already. I think when we move into any phase 1 clinical trials, then we'll certainly look at grants and other forms of non-dilutive funding. Next question is, how can you get the story of ROC out and attract new investors? That's the million-dollar question there, I think. A very good question. So we are quite active in terms of doing presentations, active on social media, and we think we are delivering as we've set out to the market that we intend to deliver. So we're just going to keep doing what we're doing. We're going to hopefully get more recognition when we do our first licensing deal, therapeutic licensing deal. We've already done a diagnostic licensing deal. But once we get that deal done, we should get a lot more attention and get the story out to a larger audience. So watch this space for that. Next question is, do you expect the diagnostics side of the business to expand? I think I know the answer to that, but I'll let you answer that, Ajay.
Yes, the answer is no. As I mentioned, diagnostics is very important. It helps us identify the patients that are affected by the cancers that we see here. So diagnostics is important. So, for example, if it was the mid-kind osteosarcoma program, you need a mid-kind diagnostic to diagnose which patients have mid-kind expressed by that cancer. We're fortunate. We've got a fantastic partner in Randox, probably the UK's leading diagnostic company, who's developing diagnostics for us. So that side of the business is covered, and we focus on therapeutics. As I said, diagnostics is important, but unfortunately, the returns for investors from diagnostics are nowhere near as, or can be nowhere near as exciting as the expected returns from a biotech company. So that's why we focused on biotech. I think we're pretty good at identifying early technology before it's been validated, and then taking it through a process, as Steve talked about. Once we get into clinical trials, you would expect significant value increases. You don't get that same increase with diagnostics, unfortunately.
Thanks, Ajay. Next question, please, can you provide more detail on how your program, Stat6 program, compares to I can't even pronounce it, ROQUEFORT's,
yeah,
there we go, Stat6 program.
Yeah, no, absolutely. That follows on a little bit to just give you maybe 30 seconds of background. So Stat6 is a great example, hopefully an exemplar of what we're trying to achieve here strategically and from a development perspective at ROQUEFORT Therapeutics. So Stat6 was an unvalidated target. What that means is that people didn't believe or didn't think that Stat6 was valuable in immunology or in immuno-oncology, so in cancer. Then in July, Sanofi, who have an enormous franchise, I think their franchise value is over 6 billion per year in revenue in immunology, do a licensing deal with a very small, fairly new company called ROQUEFORT for $1.2 billion for a single program. And that program is in preclinical development. So that program is at the same stage of development as our Stat6 that you can see here with the green. And by doing that, they've done two things. One, they have validated Stat6. They've sort of said to everyone, we as a big pharma company that has a great track record in this particular area, we believe that Stat6 is a validated target. And secondly, they're willing to put a big deal, 125 million up front, 1.2 billion is a huge deal for a preclinical program. Typically, you would expect a fraction of that, a tenth of that would be still a great deal for a preclinical program. So long answer to your question, our program compares very, very favorably. I haven't seen any unpublished data, but from the published data I've seen, I would say our program is neck and head to head with the ROQUEFORT program.
Great. Thanks, Ajahn. Next question, do you plan to bring other programs on board? I would say no, but I'll let you add some details to that, Ajahn.
Yes, no, I think the answer is no. I think this is an abundance of, amazing that we have such a fantastic portfolio. It's not a broad portfolio, it's a very focused portfolio, which is important, but it's a big portfolio. With the mRNA, that came from internal resources developed within our existing budget. I think Steve and the guys that brought Liramid in for such a small amount, after all the work that was done on it in previous years in Australia, allowed us to then build on that, and therefore being able to move the mid-kind programs forward very quickly. Similarly with the Stat6 and MK programs, those are moving at pace. But I think for us now that we continue to deliver, we continue to deliver these R&D milestones. We then continue to deliver deals to demonstrate, hopefully like Stat6, that that we can pick the winners before they're validated, before they're appreciated by big pharma and by the market, and that model I think then is sustainable. I think once we've out licensed a couple of programs, then we can look again and see what's out there. But our selection criteria is really based on the high value of the science and the very high unmet need. We're looking at cancers here where these unfortunate patients do not have another option. So that's where we're focused. We're focused on the cancers that are very difficult to treat, and we're bringing new medicines, so first in class. That's what we mean by that. This is a completely new approach, which we hope will help these patients that otherwise have very little options.
Great. Thanks, Ajahn. Next question, would the company's low market capitalization impact the potential financial offer that big pharma companies would be willing to make to ROQUEFORT in a licensing or buyout deal? Again, I'm going to say no and hand over to Ajahn for detail.
Yeah, I mean, if you look at the history of pharma acquisitions, there are very, very few hostile acquisitions. Very few. It's not the style of big pharma to do hostile acquisitions. So, and if you look at licensing deals are often completely unrelated to market cap. I think we've had a couple of examples this year of companies getting licensing upfronts that are equal or even a multiple of their market cap. So as I said, for big pharma, particularly big pharma at the moment, I mean, I think we had the slide, didn't we, where we said we've seen $5.6 billion of deals across 46 deals in Q1 alone in Europe and the UK, 84 billion in the first 5 months of 2023. So, you know, with those numbers, you can imagine what the average licensing deal, what the average acquisition is. And that's completely unrelated to the market cap. It will just depend on whether multiple pharmaceutical companies are interested in ROQUEFORT. So if multiple pharmaceutical companies are interested in multiple programs, then we'll end up with a different sort of offer. For licensing deals, you know, we're talking to multiple parties about each of the programs. So, you know, that seems like a pretty competitive landscape at the moment.
Great. Now, there's only a couple more questions to go. The next two questions I'll amalgamate into one question. Is the company happy with the level of interest shown in its pipelines? Does it align with the anticipated level of interest for pipelines at this stage? And are there multiple potential partners expressing interest in a single pipeline?
That's a very detailed question.
Yes.
Yeah, the answer in short is yes. So yes, we have multiple parties interested in multiple pipeline products, and as I mentioned, you know, pharma deals are fairly transparent. That, you know, as people know, I tend to celebrate my friends and colleagues who are in biotech who are doing deals by posting when they do a deal. I post it on Twitter. So there are lots of deals going on at the moment, and those deals are public, and therefore it's very easy to work out what a comparable is. Because of that dynamic, big pharma tend not to, you know, to be cheap. They tend to do competitive deals because there's normally 2 or 3 big pharma companies interested in each exciting product. And, you know, we're in the fortunate position where we feel, and I feel, that we have an amazing portfolio that lots of people are interested in, quite rightly.
Great. Now, the final question, could you provide an estimate of tax credits for this financial year, I assume from Australia? This is definitely one for me. So what I can say is this year we have received about $250,000 Australian dollars in cash rebates from the Australian government. We're also in the process of applying for a 14.5% cash rebate from the UK government as well. So for us, it's a material number. And if I was going to estimate, and I stress it's an estimation, for this current year, it's probably going to be 300 to 350,000 Australian dollars in terms of the cash rebate. So again, a material number for us. And that is the last of the questions. So
Stephen, Ajahn, thank you. And I think you've addressed all those questions you can from investors. And of course, the company can review all questions submitted today, and we'll publish those responses on the Investor Meet Company platform. Before redirecting investors to provide you with their feedback, which I know is particularly important to yourself and the company, Ajahn, could I please just ask you for a few closing comments?
Absolutely. As I mentioned, the early part of, the end of last year, 2022, was really about us setting the foundations to allow us to accelerate in both our internal R&D and our licensing deals. The licensing deals come from the data that we're generating from our programs. The data we generate from our programs highlights both that our programs are progressing, but also the great value that these programs could potentially bring to patients that have little other options. So, you know, our programs are all well positioned to be first-in-class medicines. First-in-class medicines are what's driving this huge boom that we see in deals in big pharma. So as a company, I think we're well positioned. We will continue to deliver those R&D results, and we'll continue to push these licensing deals. And I think, as Steve said, watch this space. Thank you for your time today.
Stephen, Ajahn, thank you for updating investors today. Can I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete and I'm sure will be greatly valued by the company. On behalf of the management team of ROQUEFORT Therapeutics PLC, we'd like to thank you for attending today's presentation. Good morning to you all.
Thank you.
Thank you. Thank you, everyone.